So thank you very much, ladies and gentlemen, for joining the second module of UAE Tax and Regulation course. I'm going to start the second module. Um, Yesterday we studied about the business environment. Today we're going to look at business entities. So, Mr. Mohan, you can ask any questions if you ever have, and I'll be happy to answer. Okay.
Sure, sir. If anything is there, I'll ask you.
So are you able to see the screen first of all?
Yes, sir.
Right. Okay. So today's learning objectives basically are that we'll be able to identify which features of companies law for mainland as well as free zone companies. So two different types of companies. We'll be uh, able to define what is economic substance, what is the meaning of economic substance. We will be able to describe the publicly available company registers, like register of auditors, or companies register, etc. We will also discuss what is meant by beneficial ownership in the context of UAE, inshallah. So that's what we are going to do today. Let us go to the first part of the module, Introduction to Business Entities. There are three types of business entities, which are basically mainland companies, free zone companies, foreign companies. So, Mohan, in your view, what would be the three categories of the companies that we are talking about? What do you mean by mainland companies?
Mainland companies means out of free zone companies, established in main area, except free zone and specific special zones.
Hmm. So, Ramsha, do you agree with that? Ramsha, are you there?
Yes.
So, can you please explain, Ramsha, what would be the difference between the two?
So, mainland, like if a company is registered in mainland, that means that company can do business all over the country, like in UAE. And if a company is registered in free zone, it is limited to those specific areas, like those specific zones.
Just to clarify this understanding, free zone companies can also do business with the mainland. This was
Yes.
this is a very debated topic, but it has become clear over the last 20 odd years. This was an early debate, but free zone companies are now even supplying to mainland, just to clarify your concepts. Okay. Uh,
Okay.
so there's no restriction as such. The only thing is that in the initial days, free zones were established in order to allow 100% ownership. But later on, this distinction was effectively removed when mainland companies also allowed it. You might remember that it was 2021. Now, what about the foreign companies? The first two answers both of you have given correctly. What about foreign companies? Why is a distinction created for foreign companies? So my question is, how can a foreign company operate in UAE? Can you?
Like as per me, Amazon is there in main head office is in US, but their operations and all handling here. But their branch, like they will open here. Main head office situated in the main country like that.
Okay, so what about you, Ramsha? What is your view on this?
I agree with Mr. Mohan.
Okay, so if you are setting up a full-fledged company in UAE, even if it is a brand name which is like Amazon or Cisco or Dell or all those big names, do you think this company, which is set up in mainland of UAE or free zone of UAE, you will still call it foreign company? No, that's not the interpretation. The interpretation is that a foreign company which is not registered in UAE can still do business, but they have to register themselves, and usually that happens through a branch. So when you mention foreign companies, actually you're referring to either a branch or a representative office, rep office. So we're going to know more about it. Legal framework is set out by UAE company law, free zone company law, DIFC company law, ADGM company law. So if you really think about it, there is mainland, there is free zone, and then there are two particular free zones which are very detailed in their company law and other regulations. That's why they have been given separately. So you know the names of those two financial free zones by now, right? What are those names?
Dubai International Financial Center
Mhm.
and yeah, Abu Dhabi Global Market.
Yeah, DIFC and ADGM. We should remember these two names, and why they are so important, because they are financial free zones, okay, and they are heavily regulated. So anyways, Department of Economic Development is a terminology that you will hear quite a lot, because it is a department of the Ministry of Economy. And this department is the regulator in mainland. You are okay. In all Emirates, Department of Economic Development or is usually there to issue trade licenses. Okay. In Abu Dhabi, there are quite a few resources Dubai economy has provided, Abu Dhabi Chamber has provided. So we can always look at the internet to find that. Now, what about free zone? What is a free zone company? Do you think that the mainland company law does or does not apply to a free zone company? Can you give an answer to that?
It doesn't apply.
To a free zone company?
No, it doesn't.
Okay, so mark your answer. This answer, this point will be raised soon enough. Okay, let's first of all look at the different free zones. In Abu Dhabi, we have quite a few free zones, like Abu Dhabi Airport free zones, ADGM we discussed. The most famous free zone is Kizad, um, Khalifa Economic Zone, like that. Okay, but this is the biggest one, Dubai. There are too many, so many free zones in Dubai. Can you guys take a few names in Dubai, which are the free zones?
Dubai Airport Free Zone,
Yeah,
Jabja Free Zone,
Jabza is there, yes. So yeah,
uh,
quite a few free. What about Sharjah? Do you know
Sa
any free zones?
Sharjah Airport Free Zone,
Yes, the most
Hamria
famous
Free Zone.
Hamriya. Two of the most famous free zones, Ramsha, are
Yeah,
Hamriya free zones and Sharjah Airport free zone, safe zone. Okay,
yes.
SAIF also we say. In Ajman, this is the most famous free zone, Ajman free zone. It has a special importance, Ajman free zone. Do you know what is that importance? This is the only designated zone in Ajman. You guys have heard this terminology, designated zone, before?
Yes, sir.
What about
I
you,
did.
Raksha? Do you know what is the difference between a normal free zone and a designated zone?
I remember this point.
Custom procedures. That's the difference. In a
Yeah.
normal free zone, custom procedures are not applicable. It is not a fenced free zone, but designated zone is a fenced free zone. Okay. So Ajman free zone is said to be the cheapest designated zone in UAE. Ras Al Khaimah also has some free zones. Rakes is the most famous free zone of Ras Al Khaimah. Similarly, Fujairah, Al Quwain, and there are quite a few free zones still under construction as well. So these were the names of the various free zones that are there. Okay. Now, more important things about the UAE company law. So, if you guys remember, what was the first law that you could call that it was a company law? Do you guys remember what was that law? Was it the federal law number 2 of 2015, or was it a 1985 law? Yesterday I told you it was called Civil Transactions Law. In that law, civil company was provided. But later on, the first company law came, which was Federal Law number 2 of 2015. So that was a law on commercial companies. That was the first version of the law. And later on, then more laws came, which were later versions of the law. We should know that there is a full-fledged commercial companies law in force right now in UAE. Okay. So company law, naturally, it contains a lot of provisions, what different companies to set up, what are the different types of companies, what different activities can happen, like commercial, financial, industrial, agricultural, real estate. All of these are the types of activities of a company can have. Okay. Company law generally does not apply to companies which are excluded from company law by resolution of the UAE cabinet. Cabinet is the most powerful organization if you really think about it, other than the higher ones, which is Federal National Council, and the top organization of UAE is the Federal Supreme Council. You guys remember that point?
Yeah, yeah.
Yeah.
Which entity, which organization, which forum is the topmost forum of UAE? What is the name of that?
Supreme
Supreme
Supreme.
Council, Federal Supreme Council.
Court
Who are the members of that council?
members.
Only 7 members are there. They are the rulers of the emirate. Okay.
Yeah.
Yeah.
Okay.
So what was the next tier? Federal National Council, FNC. Remember that?
Yes.
Federal National, and what is that Federal National Council similar to in other countries? It is similar to Parliament because half of the members are selected, half are elected. Half of them are appointed by the rulers, but other half, 20 of them, are elected.
Elected.
Right? Okay. FNC, Federal National Council. After that, then the cabinet is there and other. So president is from the Supreme Council, and Abu Dhabi appoints the president. So, anyways, some wholly owned by federal and local government, those companies are also on those also company law does not apply. So this is a key question for you to remember. Company law does not apply to those companies which are specifically excluded by Cabinet of Ministers. That's the first point. Secondly, wholly owned subsidiaries of the federal or local governments, and then operating in certain oil, gas, and other power sector companies, in which federal or local government directly or indirectly holds 25% of the equity. These three categories on these company law usually does not apply. Okay. Company law does not apply to free zone established companies to the extent of a conflict providing a special provision to do so was included in the applicable free zone law. If the free zone law says that this provision is applicable, it's a different provision than the mainland company law, then the free zone law will prevail. Other than that, company law will apply. Okay. So does
Okay.
it answer your question? Do you recall your point, Ramsha?
Yeah.
Company law of mainland company law or federal company law does apply to free zone companies unless there is a conflict. Okay. Free,
Okay.
free zone companies conducting business activities in the mainland company law does apply. There is an exception. If a free zone company conducts business in mainland, then mainland company law will apply. Where subject to a cabinet decision determining the entry and registration conditions under which free zone company is permitted to conduct activities in the mainland. So how can a free zone company conduct activities in the mainland? One approach would be open a branch, mainland branch, right? Oh, they can open branches in mainland. So that's a possibility. Now, let us come to company. Now we are going to look at the commercial company law of UAE. So there is an Article 8 which under the company law, a company results when a contract is entered into between two or more persons who are obliged to contribute to an economic project which intends to make a profit. So you see, each one of these is a critical thing. Profit. This is a condition. It should be an economic project. There should be two or more persons. But we should remember that in free zone, single member companies are also existing. Okay. that usually you might not find that in the mainland single member company, but maybe the latest version may provide for a single member company as well, but that remains to be seen. So economic project for this purpose includes commercial, financial, industrial, agriculture, or real estate, or any other activity, because activities are very vast. So usually commercial, financial, industrial, agricultural, or real estate. So commercial is a very broad term. Industrial again is a very broad term. Anything can be industrial, anything can be commercial. Company may be incorporated and fully owned by one person or by more than one person. So actually this one single member company has already been provided in the company law. Now, company name, it has to be unique. Company law provides that each company must have a commercial name, should not violate public order in the UAE, and is to be followed by legal form of the company. Okay. So the name has to be very clear, conspicuous, and should not be, against public interest. So a company cannot be registered in a name previously registered. If there is already a company registered, you cannot register a company with the same name. Company address, again, it's a legal matter. Each company formed in the company law must have a registered address. So that's Article 13 of the company law. Again, memorandum of association is also been provided by Article 15, which what exactly is a memorandum of association? Can you guys tell me? Amsha, what is memorandum of association?
It's a document that includes the details regarding the company, like about the shareholders and its formation, maybe. Yeah.
And what is the difference between a memorandum of association and an article of association?
Article of association.
Articles of association. So, Mohan, what about you? Can you please tell the difference?
Articles of association, actually, articles of association is company rules and regulations and all, it will be there. But memorandum of association, it will be company's business related
Yeah.
things,
So
it will
the
be
difference
there in
is
memorandum.
that the difference is that memorandum of association is like the constitution. It might
Yes.
not provide procedural level details. Okay. Articles of association provide procedural level details. Okay. That's the difference.
Okay.
So memorandum association has different clauses in it. It
Yes.
provides what would be the share capital, how many shareholders would be there, what will be the names, particulars of the shareholders, voting
Yes.
rights, profit distribution, etc., etc. What will be the objects of the company, meaning what business will the
Fully
company.
operations, it will operations related.
Yes, so that is memorandum association. Articles
Okay.
provide procedural level details. If you want to do this dividend declaration, it will be done through this manner. Board resolution will be passed, and this will be the form of the board. So it's a more detailed document. Okay. Legal capacity. So Article 9 of the company law covers company forms. So different forms of company are there. Company law provides for the incorporation of a range of business activities, namely limited liability company, public joint stock company, private joint stock company, general partnership company, limited partnership. So these are various types of companies that are allowed to be registered in the mainland. Company not incorporated in any of the forms is invalid, and consequently persons contracting so-called company are jointly and severally liable for any liabilities created. So the shareholders are jointly and severally liable for any liabilities created under that contract. So one should remember this point. Any company incorporated in the UAE is a UAE national company. So this point I should highlight for you guys that whenever a double taxation agreement is also entered between two countries, the word national is defined there. And wherever it is defined, it is mentioned that the word national means not only natural persons, individuals, but also companies. Any company that is registered in a country is a national company of the country. Okay, guys? So I think they have also mentioned the same. Making a company a national assist when determining whether a company is a resident of the UAE under a double taxation agreement. So residential, what is resident, what is non-resident? This we are going to look into more detail when we reach the module 8 on corporate tax, 8 or 9. So resident, I'm not going to raise at this point. Once incorporated, business entity is a legally existing entity. So it has a separate persona. So Kalama, Ramsha, can a company sue its own shareholders?
It can.
And can the shareholders sue the company, their own company?
That I'm not sure.
What about you, Mohan?
Like, company is a separate legal entity. Either shareholder can file a case and company has to file same, both vice
Yes.
versa.
In both cases, yes. Company is a separate person, Ramsha. Understand?
Yeah. Yeah.
So company can sue its shareholders. Shareholders can sue the company. And, so it's a separate legal person. If a car is purchased, for example, under a company name, can you find the name of the company on the car's registration documents instead of an individual?
Yes.
Yes.
Correct. Yes, you can. Okay, company capital. Company's capital consists of cash provided by the shareholders or partners for the shares, or even the in-kind property contributed for the shares. That in-kind property must be valued. An active partner's share of the entity capital may not be his work, nor it may be his reputation or influence. That's a key point for us to remember. Share capital can always be valued in cash. Okay. So it will be either cash or it will be in-kind property. Maybe some person is investing with a car, maybe a plot of land, maybe a building, or even an intangible asset like a brand. Why? Because these are the things on which you can place a monetary value. But someone says that, look, I'm very famous, so my reputation will be the investment in the company. That is not the right thing to do. So, okay. So, distribution of profits and losses. If a partner's proportionate entitlement to company's profits and losses is not listed in the company's memorandum of association, then that share will be calculated by applying the percentage in the company's capital. Is this point clear to you guys? How much share capital one shareholder has and how much share capital the other shareholder has, that will be the ratio of the profit sharing. Okay?
Okay.
If the company
Sir,
member, yeah,
one doubt.
yes,
If suppose one shareholder is there, he don't have any share, but he's doing operations, he's handling in that company, but uh, is they given some 0% share only, but he is the partner in that company.
he will not be entitled to profits
But
unless it is written somewhere.
so
Okay,
he can suppose company will get any loss, he will be liable or not, sir?
please understand something. When we say that this person is a shareholder, from a
Uh,
legal point of view, a shareholder is someone whose name is reflected in the memorandum of association of that company as a shareholder. If the name is not reflected as shareholder, that person will not carry any ownership in the company. The poor guy will not be able to do anything unless there is a parallel agreement signed, like a trust deed or something.
okay.
That person
Okay.
will not be able to do anything. Okay.
Okay.
But through a trust deed arrangement, one person can have another person own the shares of a company on the first person's behalf. You understand, Mr. Mohan?
Yeah. Like I have 100 shares means I can, from me, someone buy for 50 shares like that. You are saying correct, na, sir?
Yeah, so like
Like some.
you can appoint me,
Okay.
you and I can sign an agreement that I will hold the shares in the company in my name, but
Yeah.
on your
Understood.
behalf. Okay, so that's a different arrangement. If the
Yeah.
if a partner's share in the company is limited to his work, then his share in the profit and losses must be described in the company's memorandum of association. This is a very important point. Sometimes a partner can be in a company where his share in profit and losses is there only. Okay, so that point has to be mentioned in the company's memorandum of association. So if in addition to the person's physical work, the partner contributes cash or in-kind share, the person is to have a share in the profits and losses for the physical work and a second share for the cash or kind share. You understand? So a memorandum can have a profit distribution clause in which it can be identified that although Mr. A does not hold any shares in the company, but he is entitled to 50% of the profits. That is possibility. Okay.
Okay.
But memorandum has to have that clause. If the same person puts money also, then he will get 50% share of the profit and an additional part for the cash contributed. Okay. If it is set out in the company's memorandum of association, the partner should not have profits, is exempted from sharing in losses, or is granted a fixed interest against his share in the company, then the entire memorandum will become null and void. You can't say that a partner does not have profits and he will also not share in losses. That is against the principle of a company. That is why this memorandum of association will become null and void. You can't create a company against the law. Shareholder may agree in the contract to exempt a shareholder from losses if that person contributes only through effort. Okay. So if somebody is investing any share capital into a company, that person by default becomes subject to loss sharing as well. You can't exempt the person, providing that the person's remuneration is determined by reference to the effort. But there can be a person whose profit is entitled, he is entitled to a profit share because of his work only. He has not invested any money in the company as share capital. And that person can be exempted from sharing losses. It is quite possible. Distribution of profits. Fictitious profits. So that's a fraudulent case, okay? Such as book entries not representing real gains may not be distributed to, actually it's not I can't call it fraud as such, but it's a legal matter that there can be some unrealized gains in the company. So they call it, it's not fake. There's a difference between fake and fictitious. Fictitious means those which are still only on the books. They have not realized into cash. So, for example, you had some securities as investments and you did a mark to market adjustment and booked the gain on that. But the securities have not been liquidated yet, right? So that's an unrealized gain. So basically the company law is saying that you cannot distribute dividend out of the unrealized gains. So that element has to be excluded. If you want to calculate the dividend capacity of the company, that how much maximum dividend this company can distribute, you have to take that effect out of the company's profits. Is this point clear to you guys?
Yes.
Uh,
Yes.
what did you understand? Can you give me an example? Like, do you know investment properties? Which standard is it? IAS 40. You know about investment properties?
Sorry,
Anybody?
sir.
I said, do you know about investment properties? Have you heard about investment properties? Ramsha, have you heard about investment properties?
Yes, investment properties IS 40.
Buildings, for example, IS 40, right? Buildings. s- some some person can buy a building if from the platform of a company, right? So IS 40 says that if you're following fair value model, which is a dominant model, okay. So what happens with the investment properties? They have to be valued at the end of every year. And if there is a gain, what do? That gain is recorded in current year's profit. Do you understand what I'm saying? It's not a
Yes.
capital gain,
Yes,
it is recorded in the profit itself. So
appreciation.
if that company which has investment properties wants to distribute a dividend, what adjustment would they need to do for calculating the dividend capacity? Let's say, I'll give you an example. For example, let's say company's total profit was 1000 dirhams. Okay. But in that 1000 dirham, that profit came after one entry was passed to book the revaluation gain on an investment property under fair value model. So 50
We
dirhams
have to deduct that amount and we have to distribute it.
500 dirhams was for gain only for investment properties, which is an unrealized gain. So you have to subtract that. So the maximum dividend that the company can distribute is 1000 dirham of total profit minus the unrealized gain on investment properties. Only 500 dirhams. This point is clear, Ramsha?
Yes.
Okay. If a company distributes any profits in violation of the law and decisions issued over profit allocations, the partner or shareholder must refund the company with the profit he received in violation of the provision. Company's creditors may claim against each partner or shareholder a refund of the profits incorrectly distributed. Understood? That's a risky thing. We should remember we cannot distribute like partner shareholders may not be deprived of retaining distributed real profits of the company if the company sustains losses in subsequent years. So, only the cashable profits are the right distribution capacity. Accounting records and company accounts. One article number 26 talks about accounting records. Each company is established and maintained must establish and maintain accounting records and transaction into the company. Okay, there is a statute of limitation in UAE which is 5 years. So
Yes.
those accounting records must be maintained for at least 5 years from the closing date. Okay, and electronic copies are allowed. Now, because the world has become digital, it's a paperless environment nowadays. Actually, more stress is on the electronic side of it. Uh, Hopefully, we are going to see more changes to the law. So, electronic record keeping is dominating the marketplace right now. Next thing is company accounts. So each joint stock or limited liability company must have an auditor, uh, have one auditor or more to audit the company's account. Each joint stock or limited liability company. The accounts must be audited annually. Other companies may appoint an auditor according to the provisions of the company law. So we need to remember that Article 27 says that each limited liability company must also get the accounts audited. It's not an optional thing. People might be under the impression that, okay, fine, even if we have an LLC, we don't need to get it audited. No, company law says you have to get it audited. The company is to prepare annual financial accounts.
One note, sir. Sorry, sir. Sir,
Yes.
auditor means here in what is the suppose Indian audit, Indian now CA is there, Pakistan CA is there, CPA is there, ACCA is there. Who and all under it will come auditor definition, sir?
So this course that you're studying,
Hmm.
actually, this course itself was designed or devised by law. The Ministry of Economy of UAE, in collaboration with ACCA and
Hmm.
Emirates Accountants and Auditors Association, they said that in order for any person to be registered as an auditor in UAE, and to be licensed as an auditor in the UAE has to pass certain papers. Three exams were identified. One was
Okay.
international financial reporting, one was international auditing, standards on auditing, and the third one was UAE tax and regulation. So the course
Yeah.
curriculum, etc., was designed by ACCA, and it in collaboration with Emirates Association of Accountants and Auditors. And once an incumbent auditor uh, passes these three papers, of which one we are studying right now,
Yes.
this is called UAE Fellowship Program
Fellowship.
by
Yes.
ACCA. Okay. Once the person obtains the UAE Fellowship Program, then the person can request his name to be registered in the Register of Auditors with the Ministry of Economy. The Ministry of Economy maintains a register of auditors. So
Okay.
various modes are there, various ways of getting into that register are there. One way is for like you can be a chartered accountant from India or Pakistan or an ACCA itself. But UAE tax and regulation paper you will have to pass. Because see, you can get an exemption for the IFRS, and you can get an exemption for auditing paper as well. But the UAE tax and regulation paper is not exempt. That paper you
Okay.
will need to pass. So once
And
you
sir, now example, sir, why I'm asking this? Suppose I'm doing US CPA course, sir, parallelly, but
okay.
I have completed this tax course, means I can register my name, sir.
Yes, absolutely, you can. So what you will need to do is you will need to go to the website of Emirates Accountants and Auditors Association. There is an email provided. You will need to reach out to the person saying that,
Okay.
look, I need to get myself registered as an auditor. They will reply with two of the decisions actually. Uh,
Okay.
from the Ministry of Economy, and there's a finance minister's resolution, and then there's a cabinet resolution that provides the law and the procedure. Once you have passed this UAE tax and regulation exam, it is held monthly, I think every week or so it is held. The schedule you can find on the website of UAE accountants, that Emirates Accountants and Auditors Association, and you have to register, and British Council are the invigilators for that exam. It's an ACC exam, but British Council takes that exam. So once you pass it, then you can apply to the Ministry of Economy to give you a trade license or a license to practice audit in UAE, and that's how you will get registered.
Okay.
And
Thank you.
CPA is one of the eligible qualifications.
Okay. Thank you.
You're welcome. So, but the good news is that it doesn't have you don't have to have a CPA. It's not mandatory. If you have 3 years experience also and you pass
Okay.
these papers, you can still get yourself registered as an auditor.
Okay.
Company shall apply international accounting standards and principles when preparing its interim or annual accounts. Okay. So various rules are there. Each shareholder partner or company may, upon a written request submitted to the company, obtain a copy of the latest audited accounts, latest auditor's report, copy of the group accounts at no cost to the shareholder or partner. In case of a holding company, the company is to respond to a request to supply the accounts within 10 days from the requested date. So that is the law. A shareholder is entitled to get the copy of the audited financial statements. Company's manager shall prepare the company's annual budget, profit and loss account, and annual report on the company's activities and financial standing, and shall provide suggestions regarding the distribution of profits. So, the company's manager has to provide all these documents, annual budget, profit and loss account, annual report. That report includes balance sheet as well. And actually, this is similar to director's report. So it is a report on the company's activities, financial standing. Sometimes it gives strategy as well. So that's about it. And that within 3 months from the expiry of the financial year, this has to be achieved within 3 months. So each company's article association will provide the designated fiscal year. Company's fiscal year is the accounting period. Usually, it is 12 months. As per the law, the default period is 12 months, and default period is the calendar year. However, you register your company at a date which is different from the beginning of the year, then you can extend or reduce your period from 12 months. But the minimum time duration is 6 months. You cannot prepare financial statement for less than 6 months. Or you cannot prepare it for more than 18 months also. So minimum duration is 6 months, maximum 18 months. So let me ask you a question. Somebody, one company is following the calendar year, okay?
Okay.
And the company was registered on 31st May. So what will be the first accounting period of the company which will need to be, for which financial statements will be prepared or audited? 31st May is the date of registration of the company.
31st May to December tak, they can make
From
first
first,
financial year.
from 31st May, yes, you're right. 31st May to 31st December, they should.
31st December.
Correct. What about 30th September? Company got registered on 30th September. Now, what do they need to do?
Either they will treat next year 31st December tak, next year 31st December tak they can go.
So what you're saying is it will be from 30th September
30th September to
of
next
this
year
year,
31st December.
next year's, yeah, correct. You are right. So this is the rule for preparation. Following fiscal years are deemed as succeeding successive periods and
One more, sir, it was suppose sir if 18 months is the limit, na sir, 18 months.
yes, maximum limit is 18 months.
Suppose 1st June one company is first middle of June 15th they opened they started, but they not taken that financial year. They are following calendar year like 31st Jan to 31st December. But that people financial year it will be different. It will come after that time.
So it will be more than 6 months, na? So let's say 15th June the company got
Okay, first year they will consider that time 31st December.
yes.
Current starting 30.
As long as it is longer than 6 months, it will be allowed.
Okay.
Now, this is an interesting rule, and many people are not aware of this rule. Statutory reserve. Ramsha, I need you to also carefully understand this point. Article 239. 10% of companies' net annual profits must be deducted each year and allocated to a statutory reserve unless the company's articles provide for a higher percentage. So you guys must remember that all those companies which are in mainland, they need to make sure, LLCs, that 10% of the company's annual net profits are reserved in something called a statutory reserve. So it's an expense, okay, expense for the year. It's not a distribution of profit, it's an expense. Okay. Okay. The General Assembly may suspend the deduction whenever the statutory reserve level reaches 50% of the company's paid up capital. So you keep on reserving 10% of the net profits, and company will, keep booking it. When the statutory reserve reaches 50% of the company's share capital, then General Assembly can either may suspend the deduction, unless company's articles provide for a higher percentage. They can continue to reserve as well. It becomes an optional thing after the reserve level becomes equal to 50% of the company's capital. Is this point clear to you guys?
Yes.
Yes.
Okay. Accessing records maintained by the register, parties may request to access copy of company's financial statements, including records maintained by the registrar and certificate from the registrar or other uh, competent authority, including certain information included in the records. Basically, the point is that in the Ministry of Economy has a register of companies, and that register will contain financial statements or registration information, company's registration number, etc. That record can be obtained by shareholders upon request. Okay. Now, corporate social responsibilities. That's article number 242. Company may, providing a specific decision is made to do so, commencing at the beginning of the third successive year from its incorporation and providing sufficient profits have been earned, make voluntary donations not to exceed 2% of the company's average net profits during the two successive fiscal years preceding the year during which the donation is to be made. So, just to understand this point, let's say the company was incorporated in 2020, okay? From the beginning of 2020. We're assuming that 1st January 2020, okay? Now, how many years should the company be in existence in order to make a voluntary donation to a charitable institution? First question, how many years?
3
3 years. So that means 2020 full year, 21 full year,
and
2002
20.
full year, right? The company may, at
It says beginning of the third successive.
beginning of, yeah, providing sufficient decision is commencing at the beginning of the third successive year from its operation. So basically 2022, in our example, third year, beginning of the third year is 2022, right?
Yeah.
And if the year 2022 has sufficient profits, the company can make 2% donations, but that 2% will be calculated as how? Immediately succeeding to preceding 2 years. Preceding 2% of the company's average net profit during the two successive fiscal years preceding the year during which the donation is to be made. So which years will be considered? 2022 or 2021 or 2020?
2020.
Which years will be considered according to this paragraph?
20 and 2021.
2021.
Correct. Absolutely right. So 2022 will be considered only to the extent that whether there is profit or not. If there is profit, then what we are going to do is we are going to consider the profits of 2020 and 21. We're going to take the average net profit of the 2 years. And of that average net profit, we will apply 2%. That is the maximum level of donation that the company can make in the year 2000.
22.
Correct. Very good. The donation amount is subject to voluntary contribution being made only for a community services purpose and the donee being named in the auditor's report in the company's budget and in the company's budget. So to whom are we donating? That entity or that company has to be mentioned in the company's budget, and the purpose has to be community service. So NGOs basically. Okay. Now a burning topic of auditors. 3 articles. Duties of a joint stock company's auditors. Joint stock companies are relatively bigger company. Okay. There is public joint stock company, there are private joint stock companies. So, but these are bigger companies, traded companies. Auditor shall audit the company's accounts, examine the budget and profit and loss, review the company's transaction with parties, and verify the application of the company law and the company's articles of association to booking of the transaction. All of this work will be done by auditors. Even the budget will be seen. Okay, budget will be examined, P&L will be examined, balance sheet will be seen, and whether the company is compliant with the company law, that even also the auditor will see. The auditor shall submit a report to the General Assembly summarizing the audited results and shall also send a copy of the report to the Securities and Commodities Authority, SCA. It's a federal authority of UAE. So the auditor is supposed to provide the copy to SCA as well, and to the competent authority, whichever be applicable. As part of his report, the auditor shall verify accuracy of the accounting records maintained by the company, the consistency of the records. So accuracy as well as consistency, meaning you have to follow policy consistently from year to year. Accounting policies. Auditor may audit all records, papers, documents of the company and maybe request for further information. So basically, in summary, what is being said is that auditor has the rights to obtain information in order to do his work of issuing an auditor's report. The company cannot prevent the auditor from obtaining that information. If facilities are not provided to the auditor to enable him to perform the duty, auditor shall refer to this in the auditor's report. That is called a disclaimer of opinion. Or if it is a relatively smaller matter, qualification because of disclaimer. Qualification because of limitation on scope of audit work. Okay, it's an auditing matter. If the board of the directors fails to facilitate auditor's function, auditor shall send a copy of the report to SCA, which is Securities and Commodities Authority of UAE. Contents of the auditor's report. So are you guys aware? I mean, you must have seen the auditor's report, right? Usually, what are the contents? Auditor expresses an opinion, mentions the name of the company, right?
Yeah.
He mentions that we have audited the accounts, the financial statements, including profit and loss account, balance sheet, etc., etc. All the statement of financial, financial statements, the different components. Whether the company maintains regular account, company, if there were any stocks purchased, statement included in the report of the board of directors are consistent with the company's books, records and books, because directors they issue a report, and if there is an inconsistency between what the auditor has audited and what the figures that are quoted in director's report, then auditor has to highlight that in the auditor's report. Even that has to be highlighted. Statement of transaction involving conflict of interest and financial transactions. So, a lot of information is provided in the auditor's report, even violation with the company law. So that is so I think you guys have seen the auditor's report quite a few times. So that's the same format. Liability of the company's auditors. Auditor shall be liable towards the company for control works and validity of information included in his report, and shall also be liable for compensating the damage that occurred due to performance of his work. So it has to be done very diligently. The work has to be done responsibly. You just cannot do a stamp audit. You know what is a stamp audit?
Yes, sir.
You did not review anything. Company said, it's all good. Just sign the auditor's report and give us that.
Yes,
That's
sir.
a stamp audit.
Jasmine, madam.
Sorry? In case of multiple auditors, guys, someone is unmuted. Kalma, I think you have to mute yourself. Okay. So anyways. Okay, it will vanish. Now, let us talk a little bit about various penalties. So, yeah, gone. Provision of false or inconsistent information. A person who provides false information or information which is intentionally inconsistent with the rules in the company's memorandum of articles or in the prospectus. You know what is a prospectus? When you're about to sell securities, shares, for example, or other debt instruments, that's a prospectus. So if you provide wrong information so that people can invest in your company, that is an offense. Okay, that offense will be dealt with in a very strict manner. So any person who signs signed or distributed these documents, despite being aware of the inconsistency, shall be imprisoned for a period not less than 6 months and not more than 3 years. In addition to a fine amount, which is not less than 200, not more than 1 million dirhams. Wow, that's a lot, right? So auditors have a big responsibility, guys. Now, overestimation of the capital paid in kind. Why would this article be there? Can somebody tell me? How can the capital be overestimated? Can you give an example?
It maybe like if like someone has brought, let's say, his car as capital,
Mhm.
and they have overvalued the car.
Absolutely. Good example. That's a very simple and correct example. It can be
In
anything.
building also, suppose in buildings like that also normal valuation compared to more like that.
Correct. So overvaluation especially. So if that is the case, then there will be a fine, not less than 500,000 dirham. That's a big penalty, 500,000 dirham. That's the minimum, and not more than 3 million, or by one of the two punishments. Okay, and there's a jail as well, imprisonment period of not less than 6 months and not more than 3 years. Very harsh penalty. Okay, that's for misrepresenting information. Distribution of profits or benefits being inconsistent. Any manager director who distributes profits or benefits to partners or to any other person in a manner inconsistent with the provisions of the company law or the provisions of the company's memorandum or articles, as well as any auditor who approves such distribution despite being aware of the breach, shall be imprisoned for a period not less than 6 months, not more than 3 years. It's a common thing. Minimum 6 months, maximum 3 years. Okay, and fine of not less than 50,000 and not more than 500,000. That is distribution of profit. Inconsistent. You remember what was the example we gave? Investment property. So you can't distribute unrealized gain as dividends. Remember that?
Yes.
Yeah, yeah.
Hiding the actual financial position of the company. Any manager, director, auditor, liquidator who intentionally provides false information in the company's budget, profit and loss account, or financial statements, or neglects to reflect material incidents in the document shall be imprisoned for not less than 6 months, not more than 3 years. And the minimum fine, monetary fine, can be 100,000 dirhams, and maximum can be 500,000 dirhams, or by one of these two punishments. So again, this is for misrepresenting the financial figures and facts. Now we are coming to the topic of foreign companies. You remember our discussion on foreign companies? We had read three types of companies, right? Mainland companies, free
Yes.
companies, and foreign companies. There are 5 articles that cover the main provisions of the company law for foreign company registration process. Foreign company may not commence business in UAE unless the company has entered into a foreign company's register, which is maintained by the Ministry of Economy, and the approvals, etc., obtained. Ministry will specify the procedures for entry into the register. So that's where the branch comes in, for the preparation of account balance sheet of the branches of foreign companies. That's what I told you guys. Foreign companies can do business in UAE by registering a branch. The office or branch of the foreign company shall be deemed to be the foreign company's UAE domicile regarding the activities in UAE. So more, it says that more details will be provided, etc. Upon closure of a branch of a foreign company, Ministry of Economy shall deregister that office. Foreign companies subject to company law. This is Article 327. Without prejudice to special treatment concluded by federal government, by or local government, or by subsidiary authorities, foreign companies, the company law except the provisions governing the incorporation of companies shall apply to foreign companies. Why the incorporation of companies provisions will not apply? Because that company is not incorporated in UAE. It is incorporated in another country. maybe India, maybe Pakistan, maybe UAE or USA or China. So the company is already incorporated. It's only the branch that is operating in UAE. So incorporation provision will not apply. Shall apply to foreign companies conducting their activities. So foreign companies conduct of business, Article 328. With the exception of foreign companies licensed to carry activities in UAE free zones, foreign companies cannot carry an activity or establish the office or a branch unless firstly having obtained a license. So in short, branches must obtain a license. Branch of a foreign company has to obtain a license. And on that license, the activity, business activity, etc., will be mentioned. If a foreign company or office conducts an activity before having completed the registration procedures, the person who conducted shall be personally and jointly liable for the transactions. Balance sheet, except for representative offices, the rep office. By the way, do you know the difference between a branch and a representative office? Can somebody tell me? Kalama, what is the difference between a branch and a rep office?
A branch is an extension of the main office. Representative office is like a different particular office setup here in a different country.
That's not
Like
entire.
a separate fixed establishment, representative office, but then branch is an extension of the main office.
Okay. Rep office cannot do business.
Yes.
The only difference is that a branch can do business. Rep office cannot do business. It is still part of the foreign company. Except for rep office, foreign companies or their offices or branches must have separate balance sheet, a separate profit and loss account, and shall have an auditor registered in the list of auditors licensed to operate in the UAE, and shall provide the competent authority with a copy of the balance sheet, final accounts, auditor's report.
Mr.
This
Altaf,
audit, yeah, yes.
would the rep office would be a legal entity?
So this word legal entity, uh, we need to understand the precise meaning of this word. Yes, it will be a legal entity. It will be. But the question is, will it have a separate legal personality of its own? That's the question, right?
Yeah.
The answer is that branches and representative offices are an extension of their mother company.
Okay.
So they are part of another entity actually. That entity has a legal personality. So if somebody enters into a contract with a branch or a representative office, it would mean that that person is entering into a contract with their mother company. Is this point understood?
Yes. Got it.
Contract with a branch means a contract with the head office of the branch. Okay. So that's so
Got
if you even if you look into the trade license of the branch, you will find the mother company name there. And it will be mentioned that this company's branch. Okay. So branches will have their separate financial statement. Rep office, no. This is the article on rep office 332. A foreign company may establish a rep office at which it may only study the markets and production potentials without conducting any business activity. Kalma, your answer was wrong. Now you remember, now you understand?
Yeah, understood. Only the promotional activities.
No, not promotional activities.
Like not the core activities of the business.
All they can do is study the market, so research and production potentials. That's it.
like
Not
they can.
not even selling activity. They cannot do sales activity, selling promotional sales activity. They cannot do. They can only study the market and production potential. That's it. Ministry of Economy and the competent authority establish the rules for that. Okay, now a more interesting angle. Why? Why is Dubai particularly, and secondly Abu Dhabi, more really in demand around the world? so many foreign companies, 200 nationalities are sitting in Dubai. Do you know what is the reason for that? Is it only the Emirate of Dubai itself or something else? It is because of the regulatory environment that this emirate provides. Actually, this started from Dubai itself. And the biggest reason for Dubai becoming famous in terms of the international business was this that I have highlighted. Dubai International Financial Center. This financial free zone is heavily regulated free zone. And there is a full-fledged company law separately available or derived or designed for DIFC. And another very important point of DIFC is that the law that is applicable inside DIFC is common law, the English common law. Okay. But yes, the companies in DIFC are subject to the federal laws and regulations, absolutely yes. But the common law is something that in reality governs those companies. So they sort out their quarrels based on the common law. But if somebody is not, they want to enforce the federal law, which is the local law of UAE, they can enforce. But there is a kind of a silent treatment from the government that they kind of uphold that English common law within the DIFC, and that's something that is preferred in the international community. That's why DIFC and ADGM have a very, very special significance in the context of UAE. Understand this point very well, guys. Same thing goes for Abu Dhabi Global Market, ADGM. Okay, they have very detailed company laws, etc. We are going to soon read this DIFC company law and ADGM company law. So first thing, DIFC company law. It's a detailed topic. Let's see what they have. First point, formation of a company. DIFC company law permits the establishment of private company and public company. Okay. It also permits the registration of a foreign company. You remember now, Ramsha, what was the foreign company about? What does that mean, foreign company?
Yes,
What does it mean?
a company incorporated outside UAE,
But
also has like branches
having
or rep office.
having a UAE domicile, that's registration of a foreign company. And how can you get a UAE domicile? By registering what?
Uh, was
By registering a branch or a rep
yeah,
office.
yeah, that's what I said.
Yeah,
Like,
correct. So whenever you read foreign companies, immediately remember branch or rep office. Okay.
yeah.
Capacity of the entity to enter into contracts. Yeah, so I think we might already know the concept of this. So any company that is incorporated in DIFC, it has a separate legal personality. It can enter into contracts on its own. It is separate from shareholders. Shareholders' personality is different. Company's personality is different. Okay. On the date of the company incorporation, the incorporator becomes the shareholder of the company, like the shareholders, basically, the promoters. The company having the name contained in the certificate of incorporation becomes a body corporate, capable of exercising all the functions. So all the rights, liabilities, etc., they are related to a natural company has the capacity, rights, and privileges of a natural person, and the validity of an act done by a company shall not be questioned on the ground of lack of capacity by reasons of anything its article of association or by any act of its shareholder. So basically, the summary of this is company has a separate legal personality. It can take many actions that are associated with natural persons. It can own property. It can enter into contracts, many things. It can sue or be sued in its own name, etc. Okay, that's the concept. The liability of a shareholder is limited to the amount remaining unpaid. This is a very important point that people don't seem to understand. Can somebody explain this point to me? What is the meaning of limited liability? Guys, anyone would like to answer this point?
Company shareholders, their liability, a certain limit, it will be there,
Okay.
not unlimited.
Okay, let me give you an example. There is a company incorporated in anywhere, DIFC or mainland, and it has a share capital that is an issue, and each share has a nominal value of, let's say, 100 dirhams. Okay. So the shareholders have paid only 80 dirhams out of that 100 dirhams. And the company is getting dissolved. Okay. Creditors have come to the court saying that, look, our debts are unpaid. We need to recover our debts. So what will be the liability of the shareholders in this scenario? Company does not have enough money, to pay all the creditors. What will be the liability of the shareholder in this scenario?
Their
Remember,
nominal
It
value,
would be the amount
their nominal
invested.
value.
nominal value. Okay, so like nominal value of the share was 100 dirhams. Shareholders have paid only 80 dirhams out of the 100 dirhams. Now, can the creditors claim any money from the shareholders?
Yeah, the unpaid
20 dirhams?
dirham. Yeah,
Uh,
the unpaid
what
amount.
is your view? It's a basic question of corporate law, guys. And if it is not clear, you should remember that these are basics actually. We haven't even gone to the advanced stages yet, the basics of law. So the simple answer is that the unpaid amount of the share capital, which is 20 dirhams, that will be recovered from the shareholders. Okay. Only that unpaid amount is recoverable. If the shareholders had paid full amount of share capital, they would not have to pay anything. That's the whole point of a limited liability company. If they had paid the full 100 dirhams, nothing would come to the shareholders. Okay. Okay. Anyways, a private company does not breach the 50 shareholder limit. So please remember, maximum number of shareholders allowed in DIFC for a private company is 50. Okay. In the in in the company is increased beyond 50 as a result of any transfer or transmission of shares by operation of law. So let me read this paragraph again. A private company does not breach the 50 shareholder limit if the number of shareholders in the company is increased beyond 50. So in short, the maximum number of shareholders in a private company in DIFC can never exceed 50. Articles, I think we discussed already. There's no point in repeating, but just a quick recap. What is the difference between article and memorandum? Can somebody repeat that?
Memorandum of association includes just the basic details like shareholders and board of directors and
You are a practitioner. Choose your words carefully. Let's not say basic details. Uh, Memorandum is the constitution of the company.
yeah, constitution of the company, and the AOA, it involves the procedural level details
Very good.
of the company.
Very good. So now we're coming to the shares. It's a relatively longer one. We have to quickly come. So nature of shares, each share will carry the right to vote. So that's a voting right. Usually that is part of the memorandum of association of the company. Represent a proportionate interest in the company. The word proportionate interest means how much amount of a company is owned by which shareholder, proportionate interest. We also call it sometimes residual interest as well. Rank. Shares have different ranks. Can somebody give me an example? Have anyone heard about a preferred share? Shares can have different ranks. For example, voting share, non-voting share, preference share. Okay. So, and ordinary shares. So actually the company, the ownership of the company is usually in, evidenced in ordinary shares, because sometimes preference shares can be redeemable as well. Just to let you know, or sometimes a preference share may not be redeemable, but it will have a priority when the profit distribution is happening. So the summary point is that shares can have different ranks in a company. We sometimes call classes as well. Is this point clear to everyone? Salima, any questions around that? Or Ramsha?
Mm.
Okay, I'm assuming you guys have understood. Shares or other interests of a shareholder of a company are transferable in the manner provided for in the Articles of Association. Shares can be transferred, but the manner will be provided in the Articles of Association. The difference between a private company and a public company, does anyone remember that difference? Can somebody tell me what is the difference between a private company and a public company? In private company, shares are not freely transferable. Okay, they can be transferred, but they're not freely transferable. In a public company, shares can be freely transferred. Okay, is this point clear to you guys?
Yes.
Company may create different classes of shares. Okay, let us talk a little about non-cash consideration for shares in a private company. When we were looking at the mainland, you guys remember there was a penalty provision on overvaluation of in-kind shares,
Yes.
distribution, right? A private company shall not, except as provided in the Article 37, allot shares as being paid up in part or in full, other than for cash consideration. That's the default rule. Okay. Default rule is that the shares will only be issued against cash. But there is a possibility that in-kind share investment is maybe allowed in the Articles of Association. If that is the case, it will be acceptable. Where a private company allots shares for consideration other than cash, the board of directors of the company, this is DIFC, remember guys, okay? The board of directors of the company shall determine the reasonable cash value of the consideration for the relevant shares. First of all, board is vested with the responsibility to determine the reasonable cash value. That's one. Resolve that in its opinion, the consideration for the shares is fair and reasonable to the company and to all its existing shareholders. Because so the onus of this matter, the responsibility of this matter has been put on the board of directors. That if the company is accepting share capital which is in kind, board has to ensure that enough value is coming to the company, reasonable fair amount of consideration is coming, and board has to resolve that in its opinion cash value of the consideration to be provided for the shares is not less than the value to be credited, right? So basically overvaluation of in-kind contribution, who can challenge that? The board. And actually I think there will be a mention of the auditors as well. In this case, auditors will also come into play. Submit a copy of the relevant resolution to the registrar along with the allotment notice. Okay, another article is about bearer shares. It shall be unlawful for a company to issue bearer shares. What is the meaning of the word bearer? Can somebody think of it? Where have you heard this word bearer other than shares?
Checks.
Checks.
Bearer checks.
Bearer checks. So that's where it is stopping a company to issue bearer shares. Any shares issued by a company which purport to be bearer shares are void, null and void. They don't have a legal instance. Place where the registers are kept, every company shall establish and maintain a register of the shareholders and promptly enter in it all the particulars of the shareholders. Okay, name, addresses, etc. Where the company has more than one class of issued shares by its article, classes of shares will also be mentioned in that register. Company's register of shareholders, and if it has any debentures, meaning a debt instrument, its register of debenture holders shall be kept at its register office. This usually is applicable to larger companies who issue debt instruments or marketable debt instruments that are traded, etc., or otherwise available over the counter. Again, DIFC being so much regulated, they have also cited restriction on the distribution, but I think you guys would be able to make sense out of it now. because you've already read that. What was that provision in the mainland law? Remember? What distribution of profit can be done? What would be the dividend capacity, legal dividend capacity? Ramsha, can you please repeat?
It was uh it was just from the profits,
What do you mean
and you cannot like unrealized. You cannot give the unrealized gain as dividend.
as dividend? That was the key point. You cannot
Yes.
distribute unrealized profits. In summary, you cannot distribute unrealized profit. Profit distribution must happen through realized profits. Okay. One question. What about retained profits? Previous year's profit. Company can retain profits, right? Is it
Yes.
allowed to distribute retained profits?
Yes, sir.
Yes,
Yes,
because
it
that is
is
realized.
mentioned up here. It shall be accumulated realized profits. Okay. A public company can only make a distribution if the amount of its net. This is a key point, guys. This part, pay due attention. A public company may only make a distribution if the amount of its net assets is not less than the aggregate of its share capital and undistributable reserves. What is the meaning of that? Can somebody tell me? Amount of net assets. What is net assets? What is net assets? Easy word, easy question.
Assets minus liabilities.
It's
Asset
like
minus liability, simple.
Yes.
Assets minus liabilities is your net assets, right? But
Yes.
the question is, if the amount of net assets, a company may only make a distribution if the amount of its net assets is not less than the aggregate of its share capital and undistributable reserves. What is the meaning of that? Can somebody explain this to me? Undistributable reserves, what is the meaning of that? What type of
Retain gains.
retained
Example.
gains? Okay. When we were studying initially in the mainland companies law, do you recall reading statutory reserve?
yes,
Yes. Yes.
Hmm. Is that a distributable reserve or undistributable reserve?
undistributable reserve.
Undistributable reserve. Okay. And what about revaluation surplus? Like, um, property, plant, and equipment were revalued and a capital reserve was created, right? So, do you think that reserve, revaluation reserve, is that distributable reserve or undistributable reserve?
Undistributable reserve.
So, now can you tell me the interpretation of this clause? So, what
Means
are we going to balance?
actual realized retained earnings plus capital, share capital.
Realized retained earning plus share capital.
No, sorry, unrealized retained earnings plus capital.
Very good. Partly correct. Partly correct. So, can somebody improve the answer? Unrealized gains or retained earnings plus capital, plus we are missing something else. Plus other undistributable reserves, like the ones that we discussed just now, statutory
Yeah.
reserves that will
So,
also be added. Revaluation surplus, that will also be added. We have to aggregate all of that. The only thing that we are going to exclude is what type of reserves? Distributable reserves, guys. The
Yes.
ones that, though that part of retained earnings which is realized in cash. Okay, realized retained earnings we are going to exclude. So we are going to add the capital and undistributable reserves, and then we are going to compare this with the net assets. Okay, and if the net assets are even less than that, then the company cannot make a profit distribution. Is this point clear to you guys? Okay. If and to the extent that distribution does not reduce the amount of those net assets to less than the aggregate. And that's not the only thing. Let's say our first condition is okay. First condition is met, that the net assets are higher than these capital plus undistributable reserves. Now we plan that, okay, this such and such amount of dividend we are going to distribute. After distribution of the dividend, if the value after distribution is falling less than the net assets, again, same condition will hold. We will not be able to distribute profit. This point clear?
Yes.
Clear, Ramsha?
Yes.
Okay, whether a distribution may be made by a company without contravening Article 64 is determined by reference to the following. So, profits and losses, assets, liabilities, basically the relevant items of the financial statements, which we just discussed. To our good fortune, the undistributable reserves explanation has been provided. Beautiful explanation. Share premium account is also a type of undistributable reserve. Naturally, it's a capital reserve. Any capital redemption reserve. What is a capital redemption reserve? Anybody knows? Okay, I don't think you can answer that. I will quickly tell you. So,
Future,
yeah, please go ahead, Mohan.
if any shares we have to redeem, we are planning to redeem, then we have to keep for that redemption, we have to keep some reserves.
Yeah, so it can be share, it can be a long-term liability as well. So what happens is we keep setting aside a certain amount of profit into a reserve, and the corresponding assets are also, kind of reserved, so that when the time of redemption comes in, we are liquid enough to redeem our liabilities or redeem those shares. That's a capital redemption reserve. Okay, you're right. The amount by which it's accumulated unrealized profits, so far as not previously utilized by capitalization, exceed the accumulated unrealized losses. So, accumulated unrealized profits exceed the accumulated unrealized losses. So basically, net unrealized profits. Think of it this way. Doesn't change your understanding. Your understanding is already intact. Unrealized profits are part of undistributed reserves. Any other reserve that the company is prohibited from distributing by its article of association under applicable legislation. Consequences of unlawful distribution. What happens if, common sense answer, I think, what would happen if an unlawful distribution is made, right? So, where a distribution or part of distribution is made by the company to any of its shareholders is made in contravention of this previous Article 64, at the time of the distribution, the shareholders knows or has reasonable grounds for believing that it is unlawful. Shareholder is liable to repay it. First of all, the shareholder that received the profit distribution must repay it, or that part of it, to the company. Or in the case the distribution made otherwise, then in cash. It could be in-kind distribution as well, like issue of shares in lieu of dividend. They have to pay it back to the company. To pay to the company or to pay to the company an amount equal in value to that distribution. So in short, that distribution will need to be redeemed to the company. DIFC law and regulations on accounting records and final accounts. Let us quickly go through that as well. Maintenance of accounting records. It will be similar to what we read in the mainland. Every company shall keep accounting records, etc. Disclose the reasonable accuracy of the financial position of the company. Enable the directors to ensure that any accounts prepared by the company under this part comply with the requirements of the law. So basically, sufficient and adequate and accurate accounts will need to be maintained. Let us look at the financial year. The first financial year, okay, before I read this, I want you to recall what was the minimum and maximum period allowed under the mainland company law for preparation?
Minimum 6 months and maximum 18 months.
18 months. Under the DIFC law, let's see what does it say. The first financial year of the company starts on the day on which it is incorporated and lasts for a period not exceeding 18 months, as may be determined by the directors. The second and any subsequent financial year shall start at the end of the previous financial year. So naturally, I mean, here there is an exception provided. So the year end, they're saying that the second and subsequent financial year shall start at the end of the previous financial year and shall last 12 months or some other period, which is within 7 days, either shorter or longer than the 12-month as may be determined. What is the meaning of the 7 days? Can somebody clearly explain this? So let's say the company was incorporated on 1 January of a year. What is the window in which the year will close? Will it only be 31st December? Or some flexibility is there?
7 days more or less, like it can be 24th January and it can be 24th December, or it can be 7th January.
Correct. Absolutely right. What is the difference that you cited between the mainland company law and the DIFC law in terms of the financial year? Other than this 7 days matter, other than that, what is the difference?
It doesn't mention the minimum months.
Very good. Good catch. It doesn't mention the minimum time duration. It does mention the maximum one cannot exceed 18 months, but it doesn't mention that, for a period which is shorter than 6 months it will be allowed or disallowed. It does not address that.
So that means first financial year can be in like any time period. Like it can be a month or 3
By
months.
strictly in terms of the wordings of this article, yes, a shorter period may be allowed, but which company would go for that? That's the key question. Like usually, so purely from a legal point of view, yes, a shorter period is allowed, but practically no company would do that.
Let's say it is 9 months. So that is obviously allowed. Yeah.
9 months will be allowed, but the concern will be whether 5 months is allowed because it is shorter than 6 months, right?
Yeah.
So we have a choice either to prepare the financial statements for 5 months or 12 plus 5, 17 months.
17 months.
Usually 99.9% companies would go for 17 months. Okay. Accounts, Article 1 to, unless it is a multinational enterprise, they might want to, comply with their reporting requirements. That's a different case. Okay, so the directors of every company shall cause the accounts to be prepared in relation to each financial year of the company. Any reference to the company accounts is reference to accounts of the company prepared in accordance with the requirements in this article, Article 124. The accounts shall be prepared in accordance with the accounting principles or standards prescribed in the regulations or otherwise approved by the registrar. By the way, IFRS is the predominant framework under which accounting has to be done. Show a true and fair view of the profit and loss of the company and the financial affairs. Comply with the other requirements of this law. Within 6 months after the end of the financial year, the accounts for that year shall be prepared and approved by the directors and examined and reported upon by the auditors. Do you guys know that this 6 months requirement is also mentioned and highlighted in IFRS as well? 6 months duration. I'm forgetting whether this is IFRS or ISAs, but the International Financial Reporting Framework, as proposed by the IFRS Foundation and IFAC, also recommends this. So if basically the audit being culminated beyond 6 months, that would be a violation of that reporting framework. Unless otherwise provided in the Article of Association, a private company is not required to be audited. That's a key point, guys. Private company is not required to be audited if the company during the current year for which the accounts are being prepared, uh, and if the company has existed for more than one financial year, the year immediately preceding that financial year has an annual turnover of not more than $5 million, calculated on a consolidated basis. So let us recap this, what we have read just now. Unless otherwise provided in the Articles of Association, a private company is not required to be audited if that company during the current year for which the accounts are being prepared, and if the company has existed for more than one financial year, the year immediately preceding that year has a maximum turnover of $5 million, calculated on a consolidated basis, including all subsidiaries and not more than 20 shareholders for the whole of that year. If these conditions are met, meaning shareholders never exceeded 20, consolidated revenue never exceeded $5 million in the immediately preceding year as well, then that company is not required to be audited. Is this point clear? Any questions around that?
No, it's clear.
Okay. Auditors. Article 127, 128 of the company law of DIFC. Let us go through the activity of this. Okay. Application for registration. So there is a very detailed rule book issued by DFSA. Yesterday I mentioned DFSA. Can somebody tell me the pull out of this word? DFSA. Do you remember the difference between the financial free zone and its regulator? Yesterday we discussed this.
DFSC is the regulator and DFSA is the authority.
DIFC, Dubai International Financial Center, is the financial free zone.
Yeah, and the regulator will be DFSA.
Yes.
DFSA, Dubai
Yeah.
Financial Services Authority. Okay. DFSA is the regulator, and they have issued a very detailed rule book on what will be regulated for the companies that are registered in DIFC. What is the name of the regulator in case of ADGM? You guys should take notes on that. It's FSRA, Financial Services Regulatory Authority. Okay. The regulator for ADGM is called FSRA, Financial Services Regulatory Authority. Anyways, so as per the rule book that is issued by DFSA, there is an operating law, and the section 6 stipulates that an auditor applying for registration must use the form prescribed by the registrar, supported by such additional material as may be required by the registrar. So basically all the requisite information has to be provided for registration of the auditors with the DFSA, and it's not easy to get registered with the DFSA as auditor. Before the registrar grants an application for registration as an auditor, the applicant must satisfy the registrar that it is fit to and proper to be registered as an auditor, taking into account the applicant's background and history, ownership, group structure, etc. Has adequate professional indemnity insurance to provide which other service line requires indemnity? Tax agency. Tax agents are required to obtain professional indemnity. Yesterday we read this. Okay. Provide cover in respect of the work undertaken in the DIFC. Has been registered auditor in the relevant jurisdiction for at least 8 years. So that's why I told you it's not easy to get registered in Dubai with Dubai Financial Services Authority. Meets any other requirements prescribed by the registrar. Filing with the registrar. An auditor must file with the registrar at the time of filing an application for the registration or by such later time that the registrar may direct an assessment completed within preceding 3 months by an independent body and addressing such matters relating to the auditor as are prescribed by the registrar. So it's the registrar of the DFSA who will register that auditor after evaluating, after doing the assessments, necessary assessments of qualification and competency. Appointment of an auditor. A company which is required by the DIFC company law to have its accounts examined and reported by an auditor shall appoint an auditor who shall examine and report in accordance with the law upon the accounts prepared pursuant to section 1 Article 124. A person shall not consent to be appointed as an auditor of the company, act as auditor of the company, or prepare any report required by the law to be prepared by the auditor unless the person has applied and been registered as an auditor under the law. So, guys, let's say there is an audit firm registered in the mainland, and a DIFC company reaches that auditor and says, can you do an audit of our financial statements? Can that auditor, mainland or auditor, accept this audit engagement?
No.
No, they cannot. Okay. By the way, I'll tell you another ground reality, that there is something called unregulated companies in DIFC. They have been known to engage auditors outside DIFC as well, but that may be a gray area, let's put it that way. Okay. But DIFC has a lot of regulated companies, financial institutions. They can absolutely not do that. Even if they're tier 2, tier 3 category financial institutions, they can still not do that. They have to engage an auditor, which is there on the register of auditors of DIFC. Company shall not appoint an auditor under this article unless the auditor has, prior to the appointment, consented in writing to the company, and the company is not, on reasonable inquiry, aware of any matters which should preclude the auditor from giving the auditor's consent under this article. What could be the reasons whereby an auditor may not even accept the engagement? Can you think of any reasons? Ramsha?
Uh,
Okay, let me give you a hint. Conflict of interest.
yeah, conflict of interest.
Can somebody give an example, Mohan or Kalma? See, I am an auditor registered in DIFC. My wife is the director in a company. Can I do the audit of that company?
No, sir.
No, you can.
Is that a conflict of interest or not? There's an independence matter that arises, right? So there are similar other many things that can accrue. Okay. There is a bank in which the audit firm has opened their own bank account. Can the auditor do the audit for that? It's questionable. Okay. If it is a normal course of business thing, it has to be seen. So in EY Dubai, they had their bank accounts opened at an official level with HSBC, but they were doing their audit, by the way, just to let you know. The auditor's report. The company auditor shall make a report to the company's shareholders on the accounts examined by the auditor, which shall state whether in the auditor's opinion, the accounts have been properly prepared in accordance with the law. Same things being reported. So what are the components of an auditor's report? The exact same components will come. Broadly speaking, in the mainland law, auditor has to not only provide an opinion on the truth and fairness of the profit for the year, or the assets, liabilities, etc., whether they are stated fairly or not. But in addition to that, auditor also has to give an opinion on the compliance with the law as well. You guys should remember that, okay? Compliance with the law is also within the scope of the independent external audit. Same thing goes for DIFC. Auditor's duties and powers, Article 128, company's auditor shall, in preparing the report in relation to the accounts of the company, carry out such investigations as will enable the auditor to form an audit opinion. So, they will comply with their scope, whether the proper accounting records have been kept by the company, proper returns adequate for audit have been received from branches not visited by the auditor, whether the company's accounts are in agreement with the accounting records and those returns, whether the company's accounts have been prepared in compliance with the applicable accounting standards, etc. Right? The usual stuff that you find in the auditor's report, everything will be provided. Resignation of the auditor. An auditor of a company may resign from the office by depositing a notice. From a practice point of view, quite a few things in mainland are not seriously complied with. But when it comes to DIFC or ADGM, these matters can have a major bearing on the audit license. Okay. For resignation, they have to deposit a notice in writing under Article 130 at the company's registered office. Such notice operates to bring the auditor's term of the office to an end on the date on which that notice is deposited. Company shall send to the registrar a copy of the notice of the resignation. Okay, so registrar has also to be informed by the company that this auditor has resigned. When an auditor ceases for any reason to hold office, auditor shall deposit the company's registered office either a statement to the effect that there is no circumstances connected with the ceasing to hold office which the auditor considers should be brought to the notice of the shareholders or creditors of the company. Basically it's a declaration which the auditor has to give. Can you think of the reason why this declaration would be required? Because the auditor may resign under dubious conditions as well, right? That the management was imposing a lot of pressure to issue a clean report whereby the company's financial position was not well, or it may not have remained a going concern. It may not there would be a risk of bankruptcy, and if the auditor does not provide this declaration, there will be a lot of responsibility on the auditor himself. A statement of the circumstances connected with ceasing to hold office, which the auditor considers should be brought to the notice of the shareholders or creditors of the company. You see this point? So auditor, even a retiring auditor is bound to provide a notice of whether there were any circumstances that were needed to be highlighted in front of the shareholders or even the creditors. So it's a very sensitive job especially when it comes to DIFC or ADGM. Now we're coming to the foreign companies. Now by now Ramsha would remember what is meant by foreign companies, right?
Yes.
What does that mean?
Any company that is incorporated outside UAE but has a branch office or rep office in UAE.
Yes. In other words, a UAE domicile, right? Article
Yeah.
130 and 137 address the foreign entities registration and conduct of business in DIFC. Let us look at Article 133. According to foreign entities and registration, a foreign company shall not carry on business unless registered as a recognized company. Now, you can see that this is an expression. It is in title case, first alphabet capital, right? So recognized company. The board of directors of DIFC may make regulations. So there are, detailed regulations around that. A foreign company may apply to the registrar for registration as a recognized company in such manner as shall be prescribed in the regulation. Upon a recognized company becoming a company, the registrar shall strike off its registration as a recognized company. So a recognized company, which is a foreign company actually, can become a company itself. What is the difference between the two? Can somebody tell me? Come on, guys, quickly. Bhai, recognized company is a foreign company. It is incorporated outside. When that company decides to incorporate in UAE, it will become a simple company. It will no longer remain a foreign company. Okay, the place of incorporation will become UAE or the DIFC. That's why it is called a company instead of a recognized company. Article 137. When doing business in DIFC, a recognized company shall comply with the requirements of this law and where applicable, Part 3 of the operating law. In respect of conducts of business. So, the website of DIFC is available. You can go and visit that, and very detailed rule book is available. A lot of fines, penalties, everything is there. Very detailed. I think more than 1,000-page law is there. The DFSA rule book is more than 1,000 pages long. Anyways, ADGM company law. Quite a lot of similarities you will find here. So I will be quick around that. ADGM, which is Abu Dhabi Global Markets, similar, things will prevail. Let's read. A company is formed by one or more persons conforming to the ADGM registrar. Basically, one or more shareholders will come together and express their intention to form a company. They will agree to become the member of the company. They will consent to or agree to comply with the requirements of the ADGM regulation. Company may not be formed for unlawful purposes. The applicant must also contain a statement of the intended address of the company's registered office. Similar provisions are there. ADGM company law. Okay, let's read. Statement of capital and initial shareholding, which is Article 7. The statement of capital and initial shareholdings required to be delivered in the case of a company that is to have share capital must state the total number of shares of the company to be taken on formation of the initial members for each class of shares. So you remember the classes of shares, voting shares, non-voting shares, etc. Prescribed particulars of the rights attached to those shares, total number of shares in that class, the amount to be paid up, and the amount, if any, to be unpaid on each shares. Okay. It must contain such information as may be prescribed. All the particulars shall be presented in the statement of capital and initial shareholding. Statement of initial beneficial ownership. This is for the first time we are reading in ADGM company law. Beneficial ownership in last lecture we did not go through, but here for the first time it is coming up. The statement of initial beneficial ownership and control required to be delivered to the registrar must state whether on incorporation there will be any person who will be considered a beneficial owner of the company. The statement of initial beneficial ownership and control must contain the required particulars as prescribed in the ADGM Beneficial Ownership and Control Regulation of 2018. Can somebody give me a proposed structure of a company in ADGM whereby beneficial owners are different from the shareholders of the company? How will that happen? Mohan, Kalama, Ramsha, anybody? Okay, what is a beneficial owner? Can anyone tell me? Can a beneficial owner be different from the on-paper shareholder? We discussed this, Mohan. Can you give me a feedback on this? Yeah.
Means the shareholder only, no, sir. Beneficiary ownership.
Sorry, say again.
Beneficiary ownership or shareholders, both are same only, no, sir.
Both are same only. Okay. Kalama, what is your view on this? Mohan Saab, you are from India, right?
Yes, yes.
I am from Pakistan. In India, in Pakistan, in many other countries of the world, do you think all the politicians and everyone, they own companies in their own names who are corrupt, who transfer wealth into other countries and all that? Do they keep their names on the company's share capital?
No, sir.
Then how do they create those companies or control those companies?
By taking the beneficial ownership or
No,
control.
by creating agency shareholdership. They appoint proxy shareholders, bhai. They open companies in the names of other individuals. Please understand that beneficial ownership doctrine is a burning topic of today. It is a very significant matter of anti-money laundering. Okay, Financial Action Task Force, which we discussed yesterday, they have issued detailed guidelines on beneficial ownership. that, money laundering happens where specifically in cases of money laundering, the beneficial owner is entirely someone else, whereas the front shareholder is another person.
Like Binami.
I'll share a very important, for example, one perspective here without taking the name of a client that I served, which was a multinational enterprise. And what is a multinational enterprise? You guys know?
Multi-international.
Multinational enterprise under BEPS Pillar 2 framework. That is a company whose global consolidated revenues have exceeded 750 million euros, meaning 3.15 billion dirhams. Huge companies, okay? So there, one of such companies was my tax client in around 2 years back, okay? And that company had certain companies in other countries of the world, and the financial statements that were audited by a big four, KPMG, they had issued auditors report on a clean auditors report on those financial statements, and those foreign companies which were incorporated outside of UAE, they were consolidated as subsidiaries in those financial statements. And upon my inquiry, my team's inquiry, we found out that the basis of consolidation was UBO declarations taken by, considered by KPMG. Shareholders were different. There was no parent subsidiary relationship, but the shareholders in those countries were holding shares on behalf of the UAE entity. Do you understand this point, Mohan?
Yes.
So this is a very commonplace thing. Understand this well, okay? Beneficial ownership is a very important topic of today, especially in the context of anti-money laundering and CFT, countering the financing of terrorism matters, AML CFT matters. That is why these financial free zones, ADGM or DIFC, they are very sensitive about these matters. Okay. So anyways, the point is statement of initial beneficial ownership is required by ADGM. Okay. And they clearly ask that who is the beneficial owner of this company. And please also identify if the beneficial owner is different from the shareholder. This is asked. As a matter of fact, forget about these two free zones. These are the best free zones of UAE, ADGM, DIFC. You have to file such UBO returns and declarations in smaller free zones such as Shams or Quwain or Rakesh also. You guys should understand this, and you guys should refer to the UBO law, the federal level UBO law that has been issued in UAE. We are going to probably come across that soon enough. Anyways, going forward, Article of Association will not go into a lot of detail, but it's the same thing. ADGM also requires Article of Association to be prepared for the company, which is procedural level details and explains the memorandum. Limited and unlimited companies. So a company is limited if the liability of the members is limited by its constitution. It may be limited by shares or limited by guarantee. So what is a company limited by guarantee? Does anyone know? Come on, guys. Mr. Mohan, you want to say something? What is a company limited by guarantee?
That shareholder will give some portion. If any, I'm liable for this much, like that, they will give one guarantee, like this much.
Shareholders,
Suppose
yes.
100.
Yes, so shareholders give a guarantee that, in case at the time of liquidation, the company is not able to make good their debts, we guarantee such and such amount. That's company limited by guarantee. If their liability is limited to the amount, if any, unpaid on the shares held by them, the company is limited by shares. If the liability is limited to such amount as the members undertake to contribute to the assets of the company, in the case of wound up, company is limited by guarantee. If there is no limit on the liability of its members, the company is an unlimited company, but it is still a company. Do you guys know one example in the mainland of a company which is an unlimited company? This will be interesting to hear. Maybe Kalma should be able to answer this question. Kalma, have you seen general partnership structure in mainland? It's called general partnership company, by the way. So it is still a company. It still has a separate legal entity, but the liability of the partners is unlimited. Okay, guys? General partnership. Have a look at it in the mainland. Effective registration. So what happens when a company gets registered? Come on. It gains a separate legal personality. It can, do all those actions which are associated with natural persons. Same capacity of the entity to enter into contracts, that is a consequence of that legal personality. Company that is formed, it can enter into contracts. Powers of directors to bind the company, yes, it is the directors that run the show of a company. In favor of a person dealing with a company in good faith, the power of the directors to bind the company or authorize is deemed to be free of any limitation. Directors are the showrunners for the company. A person deals with a company if he is a party to any transaction or other act to which the company is a party. So a few of the articles, under Article 501, a share in relation to a company means a share in the company's share capital. Similar provisions. Let's look at Article 760. Distribution means every description of the distribution of a company's assets to its members, whether in cash or otherwise. And the following are not distribution. This is an examinable question, guys. At the end of this lecture, we will have that knowledge check. This may come. The following is not distribution for the purpose of this part. An issue of shares as fully or partly paid bonus shares. That is not considered as distribution. The reduction of share capital by extinguishing or reducing the liability of any of the members or any of the company's shares. Sometimes shares cancellation happens, right? That will also not be considered as distribution. Or the redemption or purchase of any of the company's own shares out of the capital. So treasury purchase, company purchasing its own shares, that will also be not considered as distribution. Distribution of assets to members of the company on its winding up, liquidation proceeds, that will also not be considered as distribution. Okay. Under Article 762, a company may only make a distribution out of profits available for the purpose. A company's profits available for distribution are its accumulated realized. Is it not exactly the same as DIFC and even mainland? Same, right? So far as not previously utilized for distribution or capitalization. Article 763, whether a distribution may be made by a company without contravening this part is determined by reference to the following items as stated in the relevant account. So basically, this is providing a reference to calculating that distributable amount of reserves, profit and loss liabilities, provisions of any kind, share capital and reserves, including undistributable reserves. There are 3 articles that deal with accounting records and financial records for ADGM. So we are going to quickly go through that. So every company must keep adequate accounting records. Same thing, all transactions must be done accurately. It should enable the directors to fulfill their requirements. Any accounts required to be prepared to comply with the requirements of the regulation. Accounting records must contain records underlying. So checks, invoices, electronic records, all of these things, worksheets, subsidiary ledgers, they are all part of the company's records. What is the statute of limitations? Let's look at it. Company fails to comply with any provisions. Contravention is committed by any officers who is in default. A person does not commit the contravention if he shows that he acted honestly and that in the circumstances in which company's business was carried on was excusable. A person who commits the contravention shall be liable to fine up to level 5. So how do we look at the financial year in ADGM's company law? Financial year of a company in its first financial year begins on the first day of incorporation and in the last day, and not more than the 7-day margin is also allowed in ADGM, by the way. Subsequent financial years, beginning with the day immediately following the end of the company's previous financial year and end with the last day of its next accounting year. But in all of this, Article 379, neither the 18 months is mentioned nor the 6 months is mentioned. Am I right in this?
Yes,
Yeah. In case of DIFC, upper limit was provided as 18 months. In case of mainland, both limits were provided, minimum 6, maximum 18. In case of ADGM, the article is silent on this matter. So we have to do our own interpretation. Auditors, coming to the auditors' requirements, again, it will be quite similar. Company's annual account must be audited in accordance with the part, unless the company is exempt, small companies, Section 542 subsidiary companies or dormant companies. So dormant companies are also exempted from audit. Let us have a look at appointment of auditors for private company. Auditor of a private company must be appointed for each financial year of the company unless the directors reasonably resolve otherwise on the ground that audited accounts are unlikely to be required. That's for private companies. So it's basically this jurisdiction has been granted to directors, that if they don't want to get the company audited, private company, they can resolve to do so. Auditors report on company's annual accounts. 467. Company auditor must make a report to the company's members on all annual accounts of the companies, of which copies are, during his tenure of office, in the case of a private company, to be, thank you very much, to be sent out to members. So basically, the auditor will perform the audit and share the audit reports with the members, persons who are charged with the governance of the organization. Duty to circulate copies of annual accounts and reports, and in the case of a public company, to be laid before the company in a general meeting. That general meeting is general meeting of shareholders, by the way. So contents of auditor's report, I think you guys can now even quickly mention what are the contents of an auditor's report. I told you guys, broadly speaking, what are the contents usually? Can somebody repeat? Kalma? Yes, Kalma, are you there? Kalma, can you please unmute? Okay, looks like Kalma is engaged somewhere. Ramsha, what are the contents of the auditor's report usually, broad level?
The financial statement, notes to the financial statements, and
Are these contents of the auditor's report or are these contents of the financial statements?
these are the contents of financial statements.
What am I asking? I'm asking what are the contents of the auditor's report? Mr. Mohan?
yes. Financial position of the company
Yes.
and
Then
any
opinion. What is the
any
yeah?
sorry,
We provide basis of opinion, name of the company, the the
yeah,
financial period on which the auditor report is opinion
period of the report or
that those
conduct.
right. But in addition to the audit opinion that the financial statements present fairly, etc., etc., one more thing auditors give an opinion on. What is that? Compliance with compliance
Complaint.
Compliance with
with the laws and
international
regulations.
IFRS standard.
standards.
No, the IFRS, that is covered in the audit opinion, na, that the financial statements present fairly in all material respects, etc., etc. That means IFRS is embedded in this. But one additional point that the auditor's report addresses is compliance with the
Code of
law and regulations,
directives.
okay, uh, have been prepared and have been in accordance with the requirements of the regulation. You see this last 2 points?
Yeah.
Okay. So have you heard about ESR in UAE? Economic substance rules. Okay. This economic substance rules before the introduction of UAE corporate tax. See, the window that we are looking at, this course was designed, I think, in somewhere in 2023. Recently, I think in the end of 2024, ESR, economic substance rules, they have been kind of abolished. So there has been for the periods, I think, starting from 1st January 2025 onward, this ESR reporting will not be performed because now corporate tax is already there. So this has been abolished, but still we will go through this so that at least we know what the topic is, economic substance rules. So let us look at this. There was a resolution. You know, the resolution's objective was to determine the requirements and set out the criteria confirming that a licensee carrying on an activity in the UAE had the required level of UAE-based economic substance. What is economic substance? Can you guys give a comment on what would be economic substance? Can I give you a hint? Paper companies.
Actual economic activities taking place.
Yes. So usually, Kalima, do you remember the qualifying free zone person discussion? There is a cabinet decision 100 that
Yes.
provides some guidance on what would be considered as economic substance. It is one of the conditions of a qualifying free zone person. Adequate amount of expenditure should be there. Adequate assets should be deployed. Adequate number of employees should be there. All these matters are an indication or an evidence of economic substance of a company. Okay. So that was the whole point of this law, this resolution, ministerial resolution. Okay. That to address whether the company operating in UAE, especially in a free zone, has adequate economic substance or not. So in the economic substance regulation, there was a mention of relevant activities. So this ESR reporting happens only for relevant activities. What are those relevant activities? These are 9: banking business, insurance business, investment fund management business, lease finance business, headquarter business, shipping business, holding companies, distribution and service, and intellectual property business. These are the 9 categories of the relevant activities. Understand? The UAE introduced the economic substance rules in 2019 in order to remove from the European Union's listing on non-cooperative countries. Actually, UAE came out of the grey list now. ESR was introduced in 2020 concerning economic substance requirements, but now 2025, these rules are no longer in force. There is a terminology called SIGA, core income generating activities. Okay, can be divided into 9 categories plus an additional exceptional category of intellectual property business. If you look at it, these are those. If a company has any one of these activities as their SIGA, core income generating activity, then the company must file an economic substance report. Banking, insurance, etc. And the last one, intellectual property business. Let us start with this activity. Banking business SIGA comprises of what exactly? What do banks do? They raise fund, manage risk, credit, currency, interest rate risk. They take hedging positions, provide loan and credit, manage capital and prepare reports to investors or government authorities. These are all the core income generating activities of a banking business. Okay. Basically taking money and lending it in short and managing of the risk. What does insurance do? Predict and calculate risk, right? Underwriting of it. Insure or reinsure against risk, providing insurance business to clients. Underwrite insurance and reinsurance. These are the various activities that an insurance company does. These are the CIGA, core income generating activities of insurance companies. Investment fund. So what does an investment fund management company do? They take decisions on holding and selling of investments. They calculate risk and reserve. They take decisions on currency or interest fluctuations, as well as hedging positions. They prepare report for investors. It's quite similar to banking business. If you look at it, the only difference is banks can take deposit and extend credit, but investment fund management companies, they only invest. Lease finance business. Agree on funding terms. Identify and acquire businesses to be leased. Set the terms of the duration. Monitor and revise agreements and manage risks. This is lease financing. Headquarter business. Pay very good attention to this particular point because this is one of the qualifying activities also. So what does a headquarter do actually? They take relevant management decisions. They incur operating expenditure on behalf of a group. Treasury activities are also coordinate group activities. So this is headquarter business. Shipping business. So manage crew, overhaul and maintain ships, oversee and track ships, determine what goods to order and when to deliver them. That's all shipping business. You know, the big companies like Maersk, etc. They are into this. Holding company business, as the name suggests, it's a company that the core income of which is holding shares of the subsidiaries. Okay. Just for your information, have you heard about offshore companies in JAVSA or RAC, ICC or ADGM? This is one of the activities allowed for offshore companies. Otherwise, huh? You were saying? Okay. So holding companies, so offshore companies can act as holding companies. From a practice point of view, I'm telling this. Whenever you guys are in practice advising a client, please do not ever ignore the fact that you can set up a holding company by way of a structure of an offshore company in JAVSA or ADGM or KISA. I don't know KISA offers this or not, but RAC ICC does offer this. Okay. Three particular free zones. Actually, Ajman free zone also offers offshore companies. So 4 free zones offer offshore company structure in UAE, at least. And these offshore companies you can position as holding companies. Don't ignore the importance of offshore companies. Distribution and service centers. So what does a distribution or service center does? Transport and store component parts, materials, etc. Manage inventories. They take orders, provide consulting or other administrative which are ancillary to the above, right? So you might have heard a major distributor called Muller and Phipps. They are into distribution business. They contract distribution business as well. So any company can be set up as a part of a group as well, which would be considered as a distribution. By the way, this activity, distribution and distribution activity, this is the most, how do you say, this is one of the most burning topics of corporate taxation today, because only distribution business has been, there has been a lot of stringency placed on it. In order for a distribution business to gain qualifying free zone person status, they have to be set up inside a designated zone only. You should remember this, okay? And what does distribution business do? Transport and store components, parts, materials, manage inventory, take orders. Usually they buy from one place, even out of UAE. They import here, and then they can export or supply in the mainland or even within the free zone, etc. They may or may not add value, meaning process further of the goods that they have purchased. This is a very sensitive area, distribution business in corporate tax. Intellectual property business. Again, in the context of international taxation, I want to highlight this point that intellectual property, IP, is a very vast subject. Brands can be intellectual properties. Many other, intangibles can be IP. Patent or similar intellectual property asset, SIGA shall be R&D, research and development. From an international taxation perspective, a lot of debate has been done on intellectual property business as to how to allocate revenue, how to allocate profits to different countries, because that's a bone of contention. So based on R&D activities, sometimes it can serve as the basis for profit allocation to different jurisdictions. Marketing intangible or similar intellectual property. So there are two things when you talk about intellectual property. First is creation of that intellectual property, which is a consequence of R&D, right? So which country has done more R&D on a particular intellectual property? So which country has generated more value for intellectual property? That will be a result of R&D. But then once that intellectual property is developed, it has to be sold as well, right? Maybe a software, maybe a platform, maybe something else, right? So marketing and selling of that intellectual property also would be considered a SIGA, core income generating activity for that IP business. So remember this distinction, creation and then marketing. And then there is another thing, in exceptional cases, except in cases where the licensee is a high-risk IP licensee, SIGA in respect of an intellectual property business may include any of the following: take strategic decisions and manage as well as bear the principal risk. So, uh, there have been major cases around the world, court cases, contentions that have erupted because of this, as to how to allocate profits. So key decision making will be considered in this scenario. I'm going to use a terminology here for you guys to remember. FAR analysis. What did I say? FAR. What does FAR stand for? Functions, assets, and risk. So particularly it becomes very complex in case of intellectual property business as to identify the functions and who holds the assets and who assumes the risk. Okay. Take strategic decision, manage as well as bear the principal risks, you see, relating to acquisition by third parties and subsequent exploitation of the intellectual property. First part was development. Then here we're talking about acquisition and assuming of risk. And in the third note, carry on ancillary trading activities through which the intellectual property assets are exploited. So marketing, trading, etc., outreach. All of these matters are considered to ascertain the economic substance of intellectual property business and high risk intellectual property business. SIGA performance. So the regulators collect information on the performance of performance in the UAE of the core income generating activity, while the Federal Tax Authority assesses the notifications and levies penalties for the breach. By the way, until last year, my team was actually sitting as back office for Ajman Free Zone here in UAE, whereby we were supporting Ajman Free Zone with respect to their 12,000 registrants. 12,000 companies are registered in Ajman Free Zone. And just because of non-compliance for ESR reporting, do you know how much fine was there? 50,000 dirhams of fine was there if you fail to file the return in time. So for each regulated activity, the regulator is the financial free zone, okay, or the non-financial free zone, as the case may be, in which the company is formed, or the Ministry of Economy if the company is mainland company. Naturally, there can be financial free zone, non-financial free zone. Ajman Free Zone, by the way, is a non-financial free zone, or it can be a mainland company. The Ministry of Economy does not regulate the banking, insurance, investment management, and lease finance businesses. Who regulates it? Can somebody tell me? This is BFSI. Who regulates this banking, insurance, and other, similar financial businesses? Can somebody tell me? That's an easy question, guys. In UAE, which body, which organization regulates this business? Come on. Central Bank of UAE, are Central Bank regulates banking business, okay? Insurance, investment, etc. Additionally, the central bank also regulates the banking business and lease finance business and insurance business. Uh, Securities and Commodities Authority also regulates the investment fund business. Investment fund entities can be opened in mainland under the DED as well, by the way. In order to meet the requirements of economic substance test, which is Article 7 of the Economic Substance Regulation, a licensee who is not an exempted licensee must satisfy the following criteria to meet the economic substance test. What is that test? The licensee conducts necessary SIGA in the UAE. The relevant activity is directed and managed in the UAE, having regard to the level of relevant activity. There is an adequate number of qualified FTEs, full-time employees, in relation to that activity who are physically present in the UAE, whether or not employed by the licensee or employed by the licensee or another entity, and whether on temporary or long-term contracts. But the full-time employees have to be in UAE. There is adequate operating expenditure incurred by the licensee. There are adequate physical assets. So these six criteria, we should remember these six criteria, they are considered as economic substance test. Kalima, I had asked this question, remember? So 2, 3 things I had mentioned there. So rest of the things have been clearly identified. And this is a proper ministerial resolution, by the way. The resolution does not define the meaning of adequate, nor does it define operating expenditure. So there is certain ambiguity around that. So it's a judgment call. The licensee may outsource a SIGA to an outsourcing provider. In other words, a person or entity undertaking a SIGA on behalf of a licensee, providing the following conditions are met. Outsourcing is allowed, by the way, of core income generating activities. By the way, just a question, related question. Have you guys heard about contract manufacturing or toll manufacturing? China does that quite a lot. Come on, guys. Everyone has become silent. What is happening? I think Kalima has left the meeting. Yeah. Kalima, what is toll manufacturing?
Can you come again?
I was asking, what is toll manufacturing? Toll manufacturing or contract manufacturing?
A part of the manufacturing is outsourced to some other party.
Yes. Whereas it can be a SIGA as well, but it is not one of the relevant activities. So, and what we are looking at right now is the outsourcing of relevant activities. We've already reached 9 o'clock, but anyways, let us try to see. It's a big module. The licensee must be able to monitor, control, demonstrate adequate supervision in the UAE of the SIGA being carried out by, so monitoring, adequate supervision and monitoring has to be there. The employees' expenditure and physical assets of the outsourcing provider are adequate in respect of SIGA carried out by the outsourcing provider. So employees, expenditure, physical assets. Okay. SIGA being carried out by the outsourcing provider is conducted in the UAE, and the employees, expenditure and physical assets of the outsourcing provider are not counted multiple times by multiple licensees. So one person to whom you have outsourced your core income generating activities, uh, the same arrangement that service provider could have done with another entity as well. Am I right? So what if, don't you think there is a risk that the employees or assets, etc., will be counted more than once for that service provider? So that's the provision stopping from that. Okay, cannot be duplicate counted. Relevant activity will be accepted as being directed and managed in the UAE if board of directors meets at an adequate frequency, having regard to the amount of decision making required at that level. At such board meetings, there is a quorum of directors physically present in the UAE. Minutes of the meetings are there. Directors have knowledge. They are fully capable. Minutes of the board meetings and records are there in the UAE. So, various, these are the checks and balances that have been kept to ensure that the activity will be accepted as being directed and managed in UAE. It's quite a detailed regulation actually. In relation to licensee whose activity is restricted to carrying on a holding company business, licensee will satisfy economic substance test if it complies with the requirements to submit any document, record, or information to the relevant authority in accordance with the law applicable to that licensee and has adequate employees and premises for holding and managing the holding company business. Okay, guys, I think what we should be doing, let me have a look at where we are. We still have beneficial ownership left, uh, and two more topics are left. Do you want to complete this today, Mr. Mohan, or do you want to do it tomorrow, remaining of it? Mohan?
Possible, we will complete.
Sorry?
You are okay means we can complete. Others also it's okay.
I can't understand you well.
No, others are okay means we can complete, sir.
Okay. So, okay, fine. So let us quickly run this through last parts. Requirement to provide information, that's an easy one. So each licensee and exempt licensee is to notify the regulatory authority annually of the relevant activity carried out by the licensee, whether it has generated relevant income at all, date of commencement and end of the financial year, documents, etc. Any information that is required, they should provide to the authorities, to the financial free zone or to FTA. Economic substance report. That report will contain the type of relevant activity, amounts of the income, relevant income, amounts and type of operating expenses, assets, all the various details, the SIGA, the financial statements, etc., declaration, whether or not it satisfies the substance, economic substance test. So all of that will be provided in the economic substance report. High risk IP report, that's another angle. What will it be? Let's read the way. It must demonstrate that the control was exercised by adequate number of full-time employees. So basically, again, it has to do with economic substance, that full-time employees were there, adequate supervision was there, business plan showing the reason for the licensee holding the ownership of the intellectual property, employee information, evidence of decision making taking place inside UAE. Okay, we can skip this part. So this, I think what they're doing is, this is a summary, it's a repeat, so I'm going to leave that. Let us look at the various offenses and penalties. Number of penalties have been defined. Failure to provide notification to the regulatory authority, administrative penalty of 20,000 dirhams. This is for economic substance reporting. Okay, if you don't submit notification, 20,000 dirham fine. Failure to meet economic substance test, there is a penalty of 50,000 dirhams. National assessing authority determining that a licensee or an exempted licensee committed the same violation in the financial year immediately following the financial year, and repeat violation means 400,000 dirhams of fine. Offenses and penalties for providing inaccurate information, again 50,000 dirhams worth of fine. ESR administrative penalty may not be imposed after the lapse of 6 years from the date on which the violation had been committed. So 6 years is the statute of limitation. If the licensee or the exempt licensee is subject to administrative penalty under Article 15 of the resolution, penalty shall not be imposed after the lapse of 12 months from the date on which such violation came to the attention of the National Assessing Authority. There is a right of appeal granted. A licensee or exempted licensee charged with an administrative penalty may appeal on the following grounds, but grounds have been specified. It did not commit the violation attributed to it. Administrative penalty imposed is not proportionate to the violation. Administrative penalty imposed exceeds the prescribed limit. So, these are the grounds on which someone can defend that you have imposed fine on me for ESR, but I did not either commit this violation or the penalty imposed is too big compared to what I'm doing here. My relevant income is so small that doesn't make sense, Power to enter premises. So, basically it says that the enforcement, the National Assessing Authority, regulatory authority, they have the power to enter the business premises. They have the power to ask information related to the relevant activity. We are going to the next topic of beneficial ownership. I think we discussed a little bit about it. UBO regulations have been enacted to ensure compliance with the international initiatives of OECD, Global Forum for Transparency and Exchange of Information for Tax Purposes, by Financial Action Task Force. This is OECD's regulation, but FATF has also issued recommendation for AML CFT. And for that purpose, UBO is a very important law. Mainland and free zones other than the DIFC and ADGM. So, other than DIFC and ADGM, non-financial. So, Cabinet Decision number 58 of 2020, regulating the beneficial ownership procedures, was issued, and details of beneficial owners have to be submitted. Companies' directors were to be provided the regulator which granted the company its license. Basically, it's called a UBO declaration. And every year you have to submit. Penalties for failing to comply with the UBO procedures which have been provided, they're listed in Cabinet Resolution number 53 of 2021. There are certain administrative penalties that have been provided. No further details have been given, but let's go through beneficial owner resolution and regulation. Let us have a look at it. Applicability, first of all. This resolution applies to the registrar and legal persons licensed to register or registered in the UAE, including commercial free zones, but excludes companies that are wholly owned by the federal or local government. So only private sector is subject to UBO declarations. The beneficial owner of the legal person is to be whomever it is who ultimately owns or controls, whether directly or through a chain of ownership or control, or by other means of control, such as the right to appoint or dismiss the majority of its directors, 25% or more of the shares, or 25% or more of the voting rights in the legal person. Now, ordinarily, we would think that it will be majority shareholding or majority control. But this is an interesting angle. 25% or more of the shares, or 25% or more of the voting rights in the legal person. That person will be seen as the ultimate beneficial owner. For this purpose, a legal person is a person created by the company law. UBO may be traced through any number of legal persons. So it can be a complex arrangement as well. So one parent company with 10 different subsidiaries. So it can be a chain as well. If two or more natural persons jointly own or control a ratio of capital in the legal person, all of them shall be deemed as joint owners or controllers to the extent of that ratio. If after all reasonable means have been taken, natural person is not identified as an ultimate beneficial owner, or there is reasonable doubt that any natural person identified as the UBO is the true beneficial owner, then the natural person who controls that legal person by other means of control shall be deemed to be the beneficial owner. Some exemptions have been listed. Legal person is not required to take reasonable procedures to obtain and maintain adequate, accurate, up-to-date data on the beneficial owner when the licensed or registered legal person is owned by a company listed. This is a key point. The same thing has been highlighted in corporate tax law as well. If the company is on a recognized stock exchange like ADX, Abu Dhabi Stock Exchange, or DFM, Dubai Financial Market, then the UBO compliance will not be required because it is already very, very stringent compliance. There is a register of beneficial owners. Legal person is required to keep and maintain the data on each beneficial owner in a register of beneficial owners to be established within 60 days from the date of the resolution or the date from which the legal person has been incorporated. It does not, we need to remember something. It does not say that you maintain this register of beneficial owners only if the beneficial owners are different from the shareholders. It does not say that. So that means the shareholders in majority cases are the beneficial owners. So that register will be maintained. Legal person shall update and record any changes to the data contained in the register of beneficial owners within 15 days of becoming aware of the change. So it is on the company to make sure that the data on beneficial owners is kept up to date. All the particulars will be provided in that register: full name, nationality, date of birth, residential address, etc. Nominee board members. A manager or board member who acts as a nominee board member shall inform the legal person that he is a nominee board member. What is a nominee board member? That I am acting on behalf of someone else, and provide all data required of partners or shareholders within 15 days from becoming a nominee board member. A nominee board member who accepted that role prior to the promulgation of this regulation shall inform the legal person of this fact within 30 days of the date of this resolution. This law came in 2020, so it's a transitional provision. So with very soon after this law came into force, 30 days later, they have to update the information. Register of partners or shareholders. Legal person is to keep and maintain a register of partners and shareholders, which includes the data on each of its partners and shareholders. And again, 15 days have been provided. Legal person has to update that register within 15 days. So register of shareholders and partners. It will contain the number of shares held, voting rights, date on which the partner acquires the capacity in the legal person. In case the natural person or shareholders, information to be provided is person's full name. Particulars of the shareholders have to be provided. All particulars. Okay. Particulars of the business as well as the shareholders. Provisions to and obligations of the registrar. Now, who's the registrar? It's that regulator that in which the company is incorporated. Legal person shall, within 60 days of the promulgation of the decision or date of licensing, furnish the registrar with the data contained in the register of beneficial owners. So immediately, within 60 days of the law coming into force, companies have to provide beneficial owner data to their respective registrars. It could be Ajman Free Zone, it could be Shams, it could be Rakesh. They have to update their free zone about the register of beneficial owners. These are obligation of the free zones are also under a lot of obligation. Two of those obligations are furnishing the required data concerning the National Economic Registry within 6 months of the date of promulgation of the law. So free zones were under a lot of pressure. As soon as this beneficial ownership requirements came in, they had to provide the data within 6 months of the promulgation. To whom? National Economic Registry. UAE has a National Economic Registry. If you Google it, you will find that there is a registry that the Ministry of Economy maintains in which all businesses are registered. You can trace a business in the registry. Furnishing information on the legal person in the state and making the information available to the public. That's all part of the economic registry. Okay. Confidentiality and further provisions, disclosure and confidentiality. Minister of Economy and Registrar shall not disclose the information of the real beneficiary register and partners and shareholders, or make that information available to any person unless with written approval of the real beneficiary or the board nominal member. So basically, even the government is required to take permission from the beneficial owners if they want to disclose that data, unless there is a very strong legal reason for it. So domestic and international cooperation, what does that mean? Other countries can come to UAE asking information about certain person. Ministry of Economy shall, upon a request from relevant entities, provide to the relevant entities the basic information required under companies and data contained in the register of beneficial owners. Minister of Economy shall provide international cooperation in respect of such information. International cooperation can include facilitating the access of foreign authorities to basic information, exchange of data. It can also exercise powers to obtain all beneficial owner data on behalf of the foreign entities. Administrative sanctions, minister or any licensing authority delegated by him and we're talking about the finance minister, in case of contravention of the provisions hereof, can impose one or more of the sanctions specified in the list of administrative sanctions issued by the cabinet decision. So, in case of non-compliance with the beneficial ownership law, finance minister can impose sanctions on such beneficial owners. The circumstances in which penalty is charged and the amount of the penalty in each penalty circumstance is provided for in a cabinet resolution of 2021, the cabinet resolution number 53. So DIFC as well as ADGM have a clear set of regulations on ultimate beneficial owners. Now we're coming to probably the last topic before knowledge check, public register of companies. UAE does not have publicly available searchable databases. Should information be required for a particular company, it will be necessary to personally request the information from the registry. There is a National Economic Registry, which I told you. There are exceptions, including certain free zones, which have searchable company registers. So if you go to the DIFC website, you can find the names of all the companies that are registered there. Absence of broadly available searchable register reduces the level of transparency in the UAE, makes it difficult for the ordinary man in the street, business competitors or government agencies to have free access to the company details. Let us look at the knowledge check. We will have to take it again. Okay. First question, true or false? Free zone jurisdictions have their own regulations and have a government regulatory body called the Free Zone Authority. True or false?
True.
Okay. Mr. Mohan, can you please also answer? Generally, UAE company law does not apply to companies wholly owned by federal government. Is this correct?
Yes.
Uh,
All of the above.
yes. Companies excluded by the company law by resolution of the UAE cabinet. Yes, absolutely. Free zone companies conducting business activities in mainland under rules. But it does apply, the last one. Free zone companies which are conducting business activities in the mainland under rules and regulations approved by the free zone, UAE company law applies to them. So I'm not going to take this, only two.
Yeah.
A, select all that apply. According to the ADGM provision, when forming an entity, a person or persons applying must confirm that they agree to become members of the company, and in case the company agree to become members of the company, and in the case the company to take at least one share each, yes. Are we sure that okay, hold on a second. According to ADGM provision, when forming an entity, person applying. Okay, this one share one, are you sure this was there? They are citizens of the United Arab Emirates. That is not a condition we read.
No, that is not.
Doesn't wish to form a company under ADGM regulations. Yes, this is correct.
Yes.
Okay, so let us submit. Okay. Fourth one, select the correct answer. Okay, DIFC company law permits the establishment of a private company if it meets the requirements of Article 27(1), and B, public company if it meets the requirement of 27(4). It also permits the registration of a foreign company if it meets the requirements in. Now, this is a test of memory, so I have no idea what will be the answer. So, what can anybody remember? What was that? Part 14 or 12 or 10?
I think it was
Okay,
part
let's.
14.
This is a test of memory, so it's unfair, but I will go with this. So incorrect. Part 12. Yeah, okay. True or false? According to Article 457, auditors of a private company does not need to be appointed for each financial year of the company, because directors submit audited accounts themselves. Obviously, this is wrong.
False.
So auditors cannot audit. Directors cannot audit. Select the correct answer. Company shall apply dash accounting standards and principles. So that answer is
International.
national. Okay, let's. So only one question was test of memory. Select the correct answer to complete the statement. Each company must maintain its accounting records at head office for
5.
5 years, right?
5 years.
5 years. Okay. Then what is next? Which of the following are core income generating activities under insurance business? Predicting and calculating risk, underwriting, take decision on currency or interest fluctuations, and hedging positions. Was this one a part of the insurance company? Yeah, I think we can select this. What do you
No.
think?
It was predict and calculate risk
Uh,
and insure and reinsure.
Taking decision
Not this
Third
one.
one,
I don't think so. It was there.
third one, we don't.
on interest fluctuations and hedging positions. So what does this can be a situation in the actual exam hall as well. What does the insurance company do? They invest the money that they've collected as premiums, right? So investment, they do a lot of investment, and this could happen actually. Taking decisions on currency or interest fluctuations and hedging positions. Okay, so what do you guys want to do? Selected or unselected, Mohan?
Unselected.
Unselected.
Okay, let's go. Ah, correct. So that was investment business. Okay, true or false? According to Article 13, failure to provide a notification to the regulatory authority is subject to an administrative penalty. I think this is true. This is a notification penalty. It is not a non-filing penalty. This was the first penalty under
Yes.
ESR. This is, and then the last one. Select the correct answers to complete the statement. According to disclosure and confidentiality, the MOE and the registrar shall not disclose the information of the real beneficial owner, register and partner shareholder, or make that information available to any person unless with the written approval of the real beneficial owner. Yeah, I think this was the one. Correct?
Yes.
So 9 out of 10. Yeah, perfect. Great. So we finished this module. Thank you very much for there. all these four matters have been. Let us meet tomorrow, inshallah, 6:15. Okay, guys?
Okay.
Sir,
Okay.
6:30 we can put, sir, because these days so much traffic it will be there, sir, please.
Okay, 6:30 it is, no problem.
Yeah,
Okay,
yeah.
take care. Bye-bye.